Where is the Fed on the curve, as it were? And do you think the 50 basis point rise and the trajectory that Will was outlining there will indeed bring us back down within 18 months to a reasonable place?
Yeah, good morning. So look, I think that was actually a really well laid out sort of explanation of what the market is now, or how the market is now interpreting the Fed. I think, the really interesting thing about April, T.S. Eliot was right. It was the cruelest month. The really interesting thing about it is we saw that the market finally woke up to, what we've been banging on about for some time, which was that if you insist on pursuing the kind of policies that the Fed are in terms of rate hikes and balance sheet runoff, then you're absolutely going to bring about a recession in this kind of environment. And the market finally got the memo on that, which is why we got some of the reactions that we did in April. But I think it's not, I don't think it's fully digested the memo yet, because in an environment this weak, then you can't expect that it's going to take 18 months for a recession to come through. So it's going to come through probably, if anything, ahead of those expectations. The real key, and we've been saying this for some time, is about the sequencing of this. So what the Fed say this week is absolutely crucial. Will they back themselves into another corner as they have this time? They really shouldn't be hiking at all today, and 50 basis points is madness. But will they back themselves into another corner where they force themselves to do that? So the messaging is really keen on that. And what kind of an out are they going to give themselves?
So why is hiking madness? You said hiking at all is madness, but not hiking. Not hiking means an inflationary problem of indeterminate proportions. You really want to go down that path instead?
As does hiking. Hiking makes absolutely no difference to the inflationary environment. The only way that hiking affects the inflationary environment, and again, this is something that the market has started to pick up in April. It's something we've been saying for some time. But the only way that hiking makes any difference is the damage, the destruction that it does to aggregate demand. What we have is a supply shock problem, and interest rates have, zero impact on supply issues. We've had ex-Fed board members coming out and actually admitting this in the last week or two. So the market's starting to realize this, that actually hiking is going to be absolutely no use. It's completely the wrong tool to use against supply shock inflation, and it's going to damage the economy. So we've got a Fed that's hell bent on destroying growth in a slowing economy, and completely negligent of how to deal with supply shock inflation. I mean, in fairness, it's not a Fed issue. The supply side isn't the Fed. It should be more a policymaker issue within Congress. But they're equally blind to it. So we're going to get one of the all-time huge policy mistakes that we'll be talking about for years to come.